I think the most important part of this quarter has been the acceleration of our growth. Buying into and completing the deal with Atmantan, which happened, the signing happened in the Q3 and the completion happened last month. I think we have really grown our brandscape, which is the platform for growth in RevPAR in the total revenue in the years to come. So the RevPAR growth has been good, is around 9%. The top line growth year to date is around 17%. And we expect going forward 12 to 14% top line growth, which should translate into a good flow through into EBITDA and profit after tax in the next few quarters to come, and then we'll keep guiding as those quarters go by.
Puneet, you did two acquisitions. You've been consolidating that as well. I just want to get a picture, or broader picture from you, how these two acquisitions will lead to a better RevPAR for you, and maybe a higher realization going forward.
See, one of the things that it does to the acquisition is it gives them a home in terms of a brand. And we think the Ginger brand repositioning and reimagination has been one of the best success stories that we have had in the mid-market space in India in the recent years. So if 85 to 90% of the recent acquisitions of A&K and Pride successfully convert to Ginger branding over the next 12 months, and with some asset management initiatives, we think the mid-market gets a fantastic footprint through Ginger pan-India, and then it is a very good platform to scale from 200 plus hotels to 500 or 700 in the next 10 to 15 years. And mid-market is very important. It's a 500 million addressable population in India that uses hotels and will be using hotels in the years to come. So Taj remains Taj. Taj is our crown jewel. Taj is our global jewel. It's a crown jewel from India, made for India and made for the globe. But I think it's well supported now going forward with our flight kitchen business in TajSATS, as well as the mid-market business, which is Ginger, and the other brands will follow as of next financial year.
It's interesting that you're concentrating on the mid segment, because the growth is also going to come in there. Will that also help you increase the RevPAR in this segment beyond 3,000 rupees? What is the kind of optimal RevPAR that you see for this mid segment?
See, a few years ago, the same segment RevPAR was like 2,000. And now it has jumped to 3. Very soon it will be 4. In the major metros, it's already around 6 or 7, even with the Ginger brand. But in this segment, scale is important. The absolute growth and the crown jewels in the portfolio will keep coming in the form of Taj or other boutique luxury brands that we have launched in the last year, that includes Claridge's collection, as well as post-completion of the bridge deal, which is expected to happen by end of March. So both boutique luxury and luxury will drive the RevPAR growth forward, and also our international growth with Taj. But as I said before, very well supported by Ginger, which will continue to grow by leaps and bounds, both from a scale perspective, from a revenue perspective, and will also keep driving the RevPAR more towards 4,000, 5,000 for the entire portfolio.
From a city point of view, Puneet, Hyderabad, Delhi and Mumbai NCR or Delhi NCR seems to have a softer growth this quarter. Is there a particular reason for that?
A lot is dependent on the way the delegations work out. Now, I think as we speak, you're at the Global Business Summit of ET in Delhi at the Taj Palace. By the time you finish this summit, Taj Palace will be preparing for the AI Summit, and a lot of heads of states are expected to come. As all this is happening, the Taj Mahal Mumbai is preparing for the visit of the French head of state, which is President Macron. So a lot of these activities are dependent on how the foreign delegations work, how the events pan out. Last year, there were other events in the month of December, which boosted the revenue of December. Same thing is expected in the month of February. So as long as in the 12-month period, you keep getting 3 or 4 extraordinary months,